Hello everybody, welcome back to Financial Trading Basics Part 16, Assets and Liabilities. We've talked a lot about, like I said, certain assets are correlated. Certain assets and liabilities are correlated. But nothing super definitive here, just talking about more large-scale applications of economy. Economies are local, meaning if there's an alien over there, he doesn't care about our economy. But what was I going to say? What is the first? Oh, it's just I want to emphasize that how relevant sentiment is to asset prices of anything, right? If everyone decided today we're not going to trade stocks tomorrow, literally every stock would be zero. And then you say, well, that would never happen because it's not possible. Well, if people decided to go back to bartering, and practically it would never work, but there's no necessitation for even a real business. In the general, obviously there are businesses, but what is the relationships of central banks and valuations? Again, here's just the picture of economy I have. You have one single person, right? Those people they're in groups. They're part of a species, so that's the sentiment level, and then the environment. And the reason I have it structured like that is because, right, if everyone decided not to trade stocks, every stock price would be zero. But at the same time, if everyone doesn't want an asteroid to hit the Earth, the asteroid's still going to hit the Earth. So, right, and the environments is where commodities come from, and then that's where the question of supply and demand comes from. Species and sentiment being a subset of environment, and then supply and demand being a subset of sentiment, or supply being a subset of environment. But right now, if you go turn on CNBC, they'll say, as interest rates go up, as the Federal Reserve, so you have to pay 1%, 2%, 3% on the money you borrow, stock prices go down. And that certainly could be a real correlation. Again, the data is the data. If the interest rates goes up and stock prices typically go down, then that's a correlation. But for the motivation of borrowing, I just have borrowing motivations and interest rates up here. As a business owner, if I can sit there and say, I borrow $10, I have to pay 1%, 2% or 3%, my motivation for borrowing that money isn't going to come from the exact interest rate. It's going to come from the risk reward of making an operative decision. What do I mean? Like if someone told me you have to borrow, at 5%, if I'm absolutely confident I'm going to make 6%, I would absolutely borrow the money. I don't care about the differentiation, right? Profit is what matters. As a business owner, as a business entrepreneur, I wouldn't be that caring of interest rates. It would just, again, depend on the fundamental scenario of what I'm doing in the business environment. How about from a trader's perspective? Why would, interest rates going up, a company borrows money, they make less money because they have to pay back more interest rates? I guess I'm sure that's a good, I think that's a weak correlation, but I'm sure it's a correlation. And then I want to talk about, again, all of these things: population, technology, industry plateaus, time frames. New idea comes out, it's good, people want it. How long does it go from a consumer product, just one product, to a company that's matured and has done everything it can do, and it's going to go into decline, right? We've talked about scale and physics and other stuff in that book, but like the time frames, all of this stuff should have plateaus. Well, population, I'm sure will have some sort of plateau. Pretty much, again, why would we have a plateau? I don't think we'll be running out of resources. I just think people will, at a mature level of the species, people aren't going to have kids they can't raise. Right, your impulse to go have sex, if you can't raise them, you're going to, and have 4 seconds of maturity. You're not going to jungle hump right away. But technology, do I think there's going to be a plateau to technology? There'll be, so like I said, there'll be a standardized engine. That'll be for real. There'll be a preservation of dynamic. But I don't think there'll be like new technology. Like I'm talking like 100 million years, or like think of a huge time scale. I don't think technology, the application of information, will ever go away. But industry certainly plateau. Businesses certainly plateau. But how about on the consumer level? Do people plateau? Do people stagnate? Absolutely. So, does that affect the overall economy? Sure. It's whatever they spend on, whatever they buy on. But like I said, there'll be certainly a plateau to population. Some sort of, again, in the next 5, 10, 15, 20, trying to get time frames, 25 years, there'll be a big jump in technology and then a plateau and just smaller applications. And then I think industries will continue to plateau, appreciate, plateau, and decrease just in the same way they do now. Let me start over. And then the other things I wanted to talk about today were, well, maybe the borrowing motivation, or the motivation from the Federal Reserve, right? Why would they set interest rates, right? If it goes up, for me, if I'm J Pal, oh, J Pal, bro, what's up? But for the same way as a business operator, the like 1, 2, 3, 4% on a loan is not gonna. It's the decision or the fundamental of the business that's gonna change it. Why, if I'm the head of the Federal Reserve, I would raise interest rates if I think businesses could pay them back, right? As opposed to stimulating the economy. Does a short-term stimulus affect long-term economy? Certainly affects the short-term, obviously. But again, because of sentiment, I think like even like I said, printing 1 trillion, 2 trillion, 5 trillion, 5, 10, 15, 25 years, 50 years, certainly 100 years is like really inconsequential. So like the IMF, International Monetary Fund, and the Federal Reserve specific to the United States, they're trying to have a functioning economy. So I think the motivations from the Federal Reserve is a lot more of an involved question than motivations to borrow as a consumer, right? I would go buy a house, don't care about the fucking interest rates. I would go borrow money on a business loan, don't care about the interest rates. But seeing the total economic environment, and I watched a little bit of his interview on 60 Minutes. I didn't write anything down. But I just want to say there, I think the motivations for interest rates from a business owner to the Fed is different. And again, everyone's working together. There's one sentiment, so it's more of the Fed reacting to the sentiment of the total economy, the total marketplace, stock marketplace being a subset of the marketplace of the economy. What I would say there. Now let's just talk about currency versus commodity, the Bitcoin trade, Coinbase's IPO, and Coinbase and supply and demand as a proportion or function of sentiment. Remember, supply is our environment, demand is the sentiment. But right now, Bitcoin is regulated as a commodity. A commodity is an import or an export. It's a physical thing. Bitcoin is not. So as a trader, I kind of like that it's ruled as a commodity. As an economist, that's just fucking wrong. But again, Americans trying to think for 5 minutes or do science or assign words to definitions, it gets real weird real quick. But a currency is a medium of exchange for a commodity. Like I said, you can barter commodities. Currency is the medium. With some, again, price points on Bitcoin, trading well, trading exactly as the other halving cycles. So I think I've had up here 125,000 before. I'm thinking 200K to 400K for sure for the peak. January, December to January of 2021 to 2022. But like I said, I think Bitcoin will plateau as a function of all of these things. But is that this cycle? No, I'm pretty sure it won't be the next cycle either. But how much new GDP are we going to get? how is this technology going to, increase consumer spending? It's all going, like the sentiment of the extreme bull for the next, 18 months, not once science kicks in. But it's a Bitcoin will plateau. I'm thinking, if I had to guess, I would say three cycles from now, 4 cycles from now. So, I don't know, 15 years, 16 years. But how about Coinbase IPO? What do I think about that? IPOs in general, I like to trade them. I don't think there's anything special about them. I mean, percentage increase, frankly, unless, again, even if you have a hotly anticipated IPO, like Coinbase was right around $100 billion, you don't have any trading history, but I would imagine, like I said, good for trades, bad for investment entries. Exchanges in general, do I think that's a very good business model? Do I think Coinbase is something super unique? No. First to the market or first big name. I'm on Coinbase Pro, yes. Again, it'll plateau again on a subset, company, industry. It'll plateau like all of these other things. Transactions, how many consumers will use it as opposed to just traditional PayPal, Binance. Assuming in 5 years there's a lot more exchanges, or not even exchanges, but brokerages. I don't think there'll be anything super special. I like Coinbase for the rest of the year as an indirect exposure to Bitcoin. I like Bitcoin better, but I think they'll have great revenues throughout the whole year, certainly into the quarter 3 and 4. Like I said, I don't think anything special at IPOs. I do like to trade them, but absolutely nothing special. And then 2 just quick notes, finish up this episode here. Some terms I don't like: EBITDA and ETF. Earnings before interest, taxes, and amortizations. So not earnings. If I have to pay taxes, I haven't earned that dollar, Johnny. Our earnings is profit. Profit is the dollar you put in your pocket or distribute amongst your shareholders. The end. And ETF. Why don't I like that one? I don't say I don't like ETF. It's not clear to me when people use it. ETF, exchange traded fund. So people have a chunk of money and they said, here's what we're going to invest in. ETF to me is the most broad thing, right? Exchange traded fund. Right, companies trade on exchanges, funds trade on exchanges, but I don't know why I don't like this. I just don't like ETF. Something throws about me logically. Again, I'm just thinking out loud. But that's what I wanted to say about the correlations of assets and liabilities. Overall, again, macro versus micro economy is not a thing. We've proven systems scale proportionally, so macro versus micro just stopped. In school, but that's what I think about Coinbase, Bitcoin, larger scale economic thoughts, and the relationship of central banks, or interest rates, and public company valuations. Thanks for watching Financial Trading Basics Part 16, Assets and Liabilities.